Good morning. It's Jeffrey Cohen. It's April 25th, 2022. I am the CEO, president of Chicago Quantum, and we're here to talk about the market. So what's going on with the market? Where are we at? So first thing to note is futures are lower. Futures are significantly lower this morning. US dollar's up, which is actually usually very bearish for equities. And the debt, the U.S. Treasury bonds, those yields are down. So the market has decided to give back some of the higher interest rates. Crude oil's down. Gasoline's down. Most of your soft commodities are down. Most of your metals are down. Cattle and hogs are up, which is very exciting, but I don't know if you're hungry. So other thing I noticed in the market, which I thought was pretty crazy, is the stock market's fallen a lot. I know that's pretty obvious if you look at your investor statement, right? But QQQ is down 2.5% over the past year, excluding dividends. The Russell's down 12.5%, excluding dividends, and the S&P 500 is up 5% over the year. So if you were fully invested in those three indices, you didn't do so well. Forward looking, our model is calling a 4% yield moving forward for the year. 4%. That's a terrible, terrible day. The other thing I want to talk about on Friday is debt, right? So, stocks go down is what it is, right? But what about debt? So bonds are down. So according to FINRA Morningstar, which is a good site, it's a FINRA Trace market bond activity, total issues traded on Friday were about 8,500, a little over 8,500. You know that 2,300 advanced, 5,800 declined. And that ratio held whether it was convertible, high yield, or investment grade. And so in terms of 52-week highs and lows, all issues, 27 new highs, 4,500 new lows. That means 50% of all bond issues that traded on Friday, 50% of all bond issues that traded on Friday were at 52-week lows. Wow, is that terrible? Just wanted to let you know that. So you lost a lot of money in bonds. The other thing that's interesting is our model. Only 2 stocks showed up better than the fully diversified market. It's unbelievable. Basically, QQQ is our third best individual stock to hold. The S&P 500 is the 6th best, and the Russell is the 9th best. So what that means is you can go out and pick individual stocks to bet on, but it's not an efficient bet. If you want to be efficient, if you want to have the highest return expected with the lowest risk, you just want to hold those 3 indices. Even though they're down, the odds are they're going to go back up again, right? The S&P 500, the Russell 2000, the NASDAQ Composite 100. And that's much better, much more efficient. In fact, there's no dividend stocks that are picked by our model to be better than the S&P 500 right now. None. There's no dividend stocks to buy. Now, what's interesting about this market is we spent the weekend researching retail, researching minerals and mining. Right? These stocks are dropping. These stocks pay dividend yields. These stocks have earnings. These stocks have power, and yet they're down. So if you have a long-term horizon, buying horizon, holding horizon, not a bad time to be building your buy list right now. Stay in cash, build your buy list, and see how you do. There's only one other thing I want to talk about. So our best portfolio has a lot of stocks in it. Relatively speaking, it's a large portfolio. So the way our model works is it says, okay, what is the best portfolio you can hold for a risk return? And in fact, it's 8 stocks. And these are like high flyers, but there's 8 of them. And so if you held them all 12.5% each, you're going to you're going to have a lot of beta. You're going to have a lot of market power, and you're going to have a lot of interstock correction. So generally speaking, you're going to do better than the S&P 500. It's not a great portfolio in that it's only 6 times better than the S&P 500 in terms of risk return. So it's still better, but that's interesting. The other thing I thought was interesting is there are 6 stocks right now that are leptokurtic and have very low variance. So if you wanted a relatively low risk, high dividend yield portfolio that doesn't really move, it doesn't really surprise you, we found 6 stocks. Now, these stocks were boring. If the market's going up, it's boring. I don't want all those stocks. They're like the most boring, right? But at a time when the market's going crazy, you can get a high yield and you can do pretty well. So 8 stock, high risk, lowest risk, but high risk, charge to market. 6 stocks, low risk, low expectation of surprises, safe portfolio. And that's what we found. So if you want to hear what those stocks were, shoot me a message in the chat below. Write a comment. Hey, Jeff, what are those 6 leptokurtic low variance stocks? What are those 8 Chicago Quantum Net Score up stocks that we should hold? And hit the subscribe button. It's that red button. It really helps us. It shows that you want to know about our streams. You want to be notified. And, you support our work. So thanks very much. Hope you have a great day in the market today. Hope it picks up and everyone has a green day today. You take care now. Bye-bye.